Holding on to opening gains, although just a little bit of a cool off from the opening highs. 25,160 is where we are at the current juncture. The mid cap index also moving in tandem with the benchmarks. But let me quickly bring on board our fundamental guest for today. Then joining me is Kranti Badhini, who's the equity strategist at WealthMills Securities. Kranti, great to have you on the show. First of all, what are you making of the earnings that have come out so far? We've had TCS, HCL Tech reporting numbers from the IT pack, where TCS was a disappointment, but HCL Tech has managed to beat expectations. And later on, we have Infosys as well and Wipro as well, wherein a bonus issue will be considered, particularly for Wipro. So, what are you making of the IT earnings before we move on to other sectors? Tell us, is there any scope for a guidance revision by Infosys as well? Because HCL Tech, of course, has done that.
Yeah, Nandita, good morning to you. We don't see any kind of blackbuster kind of results from the IT pack at this point of time. By and large, it's neutral at this point of time. The managements are in a wait and watch approach right now. Of course, the TCS numbers looks subdued. It's mixed kind of numbers at this point of time, and the same kind of pattern can be by and large we are going to witness among all the IT stocks. But the one key observation is the US economy is moving strength to strength at this point of time. The data is quite strong at this point of time. So, but still, the traction is not coming in terms of the earnings. The exuberance is not translating into the numbers at this point of time with respect to the IT stocks are concerned. So that is the reason. If you say the worst is behind, yes, definitely worst is behind for the IT stocks on a medium to longer term perspective. In short term, there can be some kind of hiccups. The US election is in the coming months. So that is the reason the managements are in a wait and watch approach due to the policy making decisions are still going to change or how the things are going to pan out. That's the main reason all the managements are little bit conservative in terms of their guidance are concerned. So right now, the worst is behind for the IT stocks, but still we are cautiously optimistic with respect to the IT as a sector is concerned.
Okay, before I talk about other stocks, what are you making of the market valuations now? We've come off from highs, 3 to 4% kind of a correction. So, would you say that valuations are fair now, or do you see, do you expect some bit of more correction to take place, and perhaps then the valuations will become a little more attractive? What are your thoughts on how the valuations are stacked up at the current juncture?
Nandita, we are supported by strong set of liquidity, and the liquidity both from the domestic, of course, we do witnessed in the last 10, 12 trading sessions, FIs have been exiting India, but the liquidity is quite strong, and the FIs for exiting India, this is a hot money that has been exiting India, but the long only money is still is there in Indian markets, and also there is a euphoria around Indian markets, and a lot of money has been waiting on sidelines to enter into Indian markets. So the valuations are concerned. Okay, in a medium to shorter term perspective, they are looks little bit stretched when you compare with the other markets because when anyone have to compare with the other emerging markets like China and all, our valuations look stretched. But given the kind of growth story we are having and the way the Indian economy is positioned at this point of time, we are sweet spot at this point of time. So valuations is not a key concern for the investors, but any kind of healthy correction, any kind of correction that's coming, that has been absorbed by the domestic liquidity. So for medium to longer term perspective, of course, in the next few years, Indian valuations look stretched only because we are on a growth path, and the growth is factored into the valuations at this point of time. So I don't think so. Indian markets are overvalued, but there can be some kind of pockets and sectors or stock specific themes are there where we can see some kind of froth. But by and large, it's going to be a stock specific market. But on a longer term perspective, we are fairly valued at this point of time. any dip on Indian markets is definitely a warranted buy for the investors.
Right. We have a slew of IPOs that are opening up, and big ticket ones, right? Because today Hyundai Motor India IPO has opened up. It's the largest ever IPO after the LIC's 21,000 crore rupee IPO. Of course, it is entirely an offer for sale, and it could list somewhere around the 22nd of October. But given the fact that you mentioned that we are looking at very strong liquidity in the Indian market, but the slew of IPOs that are hitting the markets, Hyundai today, Swiggy also in the pipeline. You have NTPC Green as well. So a lot of these IPOs are coming up. Do you expect these issues, big ticket issues, to suck out some liquidity from the system? And your thoughts on how one or whether one should really subscribe to the Hyundai IPO or not? Because in terms of valuations, some concerns have been raised by analysts. And if you look at the market share vis-a-vis Maruti, it's of course, Maruti is the leader, but market share also is just about 15% or thereabouts. So, what are your thoughts on where the liquidity is headed from here in light of all these IPOs, and how one should really go about looking at Hyundai Motor India IPO?
Yeah, Nandita. First, with respect to the liquidity is concerned, of course, there are mega IPOs. These are all lined up, but there is a strong emphasis with respect to the liquidity. We have the SIP flows have been quite strong, and the number of new demat accounts have been getting added every month on a regular basis. So the liquidity has been quite strong. Uh, uh, and I don't think so. Okay, there will be any kind of concern with respect to the liquidity, despite of these mega IPOs that are lined up at this point of time. Of course, there can be some impact in the medium term and in the short term, but I don't think so. It's going to have a greater impact on the markets at this point of time. We have strong liquidity. The flows have been quite strong. DIS as well as the retail investors and HNIs and PMS have been sitting on a good amount of cash at this point of time. So I don't think so. Liquidity is a concern for Indian markets in the medium to shorter term perspective. But coming to the Hyundai IPO is concerned, one thing, Nandita, we need to take into cognizance. The company had a strong history. They launched their first product in 1998. They come across 26 years, and they know they understood the Indian roads better. And during this phase of 26 years, what we have witnessed is many global auto majors entering India and exiting India and trying to re-enter India. That's what the saga what we witnessed in during this phase. But Hyundai Motors, they could able to sustain and they could able to increase the market share and emerged as one of the formidable OEM in India. So due to the longer term perspective, and India has a growth phase and disposable incomes are growing up, still cars are considered as a luxury in India. So as they are becoming necessity, these are the OEMs that are going to take greater advantage. So on a longer term perspective, definitely Hyundai Motors is a buy for the investors. If they want to subscribe, they can subscribe, despite of the key valuation concerns because of the change in the mood in the market in the last few trading sessions. So people are talking about the valuations. Otherwise, for a longer term perspective, Hyundai Motors is better positioned in Indian markets.
Right. I also want to point out major brokerages have also given subscribe rating to this IPO. In fact, the company has already raised 8,300 crore rupees from 225 anchor investors, and the anchor book boasts of names like GIC, New World Fund, Fidelity. On the domestic side as well, ICICI Pru MF, SBI MF, and HDFC MF. But last question, really, Kranti, if one were to look at rejigging their portfolios, where would you advise investors to book profits, and which are the pockets that they could look at, in terms of, pockets that allow or give you some kind of valuation comfort?
Yeah, Nandita, there are in the recent euphoria and exuberance and in the market, investors would have onboarded many of the companies where the valuations are stretched, where the froth is there, and market is giving a good opportunity for them to exit those kind of names. It is by and large stock specific at this point of time. I don't want to get into sectorial theme also. By and large, there are some, definitely the froth is there in some kind of stocks. So market is giving an opportunity for them just to recorrect their portfolio, realign their portfolio, give prior importance to the earnings at this point of time, because stock market always voting machines in short term and weighing machines in long term. So where the earning visibility is quite strong, that's where the investors need to chip in at this point of time. Preferably, risk averse investors can chip into the large cap companies, because there was a fringiness a fortnight back entering into all sort of stocks at this point of time. One need to have that discipline to be in these markets.
Okay, I want to take up this, opportunity to ask you a query that has just come in. I want to get in your thoughts on the overall railway space, because one of our viewers, Savia Mascarenes, has a query on IRFC. If you could help our viewer with how should one really navigate railway stocks at the current juncture, how would you advise them to go about it?
Yeah, Nandita, with respect to the sector is concerned, the stock have been in a momentum zone in the previous quarter, a couple of months back. Right now, they entered into a consolidation phase at this point of time. But with respect to the railway infrastructure is concerned, still there are leg room to go, leg room for these companies to grow further. Especially the railway infrastructure is concerned, they are still they are going to be on a robust note because of the new initiatives, new infrastructure projects, and the new safety measures, and also the new order book that are coming. So we are quite sanguine about the railway stocks on a medium to longer term perspective. Of course, short term, some kind of consolidation is taking place at this point of time. IRFC is concerned, is this the stock, the market capitalization is more than a lakh at this point of time. So on a medium to short term, one can book profit in IRFC because of the valuations are concerned. Remaining infrastructure stocks are concerned in railway infra and railway consultancy business. One can hold on. With respect to the finance, IRFC is concerned, if he is sitting on good amount of profits, he can book, take some profit from the table, or if he want to hold on, okay, he can hold on. But on a medium to shorter term, the valuations look stretched for me at this point of time with respect to railway finance business is concerned.
All right, that's the view on IRFC. Hope that answers your query. But with that, we're completely timed out on this edition of Opening Bell. Kranti would like to thank you for taking out time and joining in and sharing your thoughts with us. Always appreciate you joining in, and of course, look forward to interacting once again sometime soon.
Thank you, Nandita.